Russia and China are simultaneously opening up fresh sanction-proof trade routes to plug into these increasingly liquid non-dollar denominated clearing systems. It's clear that the de-dollarization process is rapidly escalating, yet none of this is factored into the paper price of gold. China has become the world's largest trading nation, period, dominating global trade, just as its share of US trade in dollars is actually contracting. So there's not a strong position for the US to play against.
Over the past several years, the US dollar has faced growing opposition as the world's dominant reserve currency. Having held this position for decades, some nations are now seeking alternatives. The BRICS bloc is leading the effort, partly driven by necessity. Russia in particular has been hit hard by Western sanctions that weaponized the dollar, prompting the need for alternative transaction methods. These actions have further undermined the dollar's standing. As of 2024, the Atlantic Council's dollar dominance meter shows the dollar's share of global reserves at 58%, a significant decline from 74% in 2002, just after the BRICS bloc was formed. Andrew Maguire, with nearly 50 years of experience as an independent Loco London metals trader and analyst in the precious metals industry, delves into the underreported short-term market moves driving gold price action and the shift away from the US dollar. Maguire explains that China is taking the lead in the BRICS nations' push to establish a multipolar world. These countries, he notes, account for approximately 85% of global trade, either producing or consuming the majority of the world's goods. In a recent reaffirmation of the bloc's commitment, the BRICS Bank president recently assured us that ditching the US dollar is the main focus. The Economic Alliance's new development bank has continued to ensure the promotion of local currencies. Maguire also said that while China has not yet employed its financial nuclear option, by revealing the true value of its gold reserves held within state banks, it may soon be compelled to do so. This move, he believes, could have a significant impact on the global financial system. Despite this rapid process of de-dollarization, none of it is reflected in the current paper price of gold. Following the BRICS summit on October 22nd, Maguire expects Western central banks to revalue gold well before the fourth quarter of the year. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
China anchors and faces the multipolar BRICS nations, and this is the global majority who produce or consume something like 85% of all the global trade. Amongst themselves, China has become the world's largest trading nation, period, dominating global trade, just as its share of US trade in dollars is actually contracting. So there's not a strong position for the US to play against. And while Westerners focus on the intraday and intra-week market swings, in gold I'm talking about, and other markets as well, China takes a more pragmatic, longer-term view. And with all lessons learned following the weaponizing of the SWIFT banking system against Russia in 2022, China is increasingly encountering friction relating to Taiwan and facing down the US in the South China Sea too. And these geopolitical escalations are not going unanswered. Not just what we see in the currency crosses where China swaps dollars for NSFR compliant gold, but China is now also sanctioning US businesses providing arms sales to Taiwan.
China has so far not needed to invoke the financial nuclear option of revealing the real value of its gold reserves, currently salted amongst the state-held banks, but it will soon have to lift the lid on the Sino-Russia gold reserves that provide the anchor liquidity to the 40% gold, 60% BRICS member-backed Enbridge token. It is this revelation that will invoke Western-facing banks, including the Fed, to revalue their gold reserve account bullion holdings to market, likely in the range of something like $2,700 to really $2,700 to $3,000. It's one of those two. We don't know. But given the avalanche of de-dollarizing, I would think the higher market, the higher price jives with what we're seeing from now first-tier banks talking about $3,000 gold.
So given current geopolitical escalations are accelerating alongside the BRICS Enbridge settlement currency and Glasnev's yet to be launched but beta tested option 2 commodity currency. Russia and China are simultaneously opening up fresh sanction-proof trade routes to plug into these increasingly liquid non-dollar denominated clearing systems. It's clear that the de-dollarization process is rapidly escalating, yet none of this is factored into the paper price of gold. And following the BRICS October 22nd summit, we would expect to see Western-facing central banks revaluing gold, and that to be implemented well ahead of the fourth quarter.
In 2023, China's central bank emerged as the world's largest single buyer of gold. However, its recent decision to pause its buying activity has dampened Chinese investor demand over the past few months. Globally, central banks added a net 37 tons of gold to their reserves in July, according to the World Gold Council, WGC. This marked a 206% month-on-month increase and represented the highest level of central bank gold purchases since January. These figures follow record-breaking gold purchases by central banks in the first half of the year. Despite this trend, China's central bank refrained from adding to its gold reserves for the fourth consecutive month in August, as revealed by official data. At the end of August, China's gold holdings remained steady at 72.8 million fine troy ounces. However, the value of its gold reserves increased to $182.98 billion, up from $176.64 billion at the end of July. According to Andrew Maguire, tracking the full extent of the People's Bank of China's PBOC monetary gold purchases is nearly impossible, particularly when acquisitions are made through proxies. Maguire explains that most of the PBOC's domestic gold purchases are transacted in RMB, which he expects will strengthen, triggering a wave of dollar sales. Let's now turn our attention to the video again.
It is impossible to track the scope of all the PBOC's monetary gold purchases, especially when they're purchased by proxy. Furthermore, imports of artisanal doré gold are hidden in the dollars for gold mix. PBOC buying of all home-produced gold is largely transacted in RMB, which, for reasons we will look at now, is expected to strengthen into an avalanche of dollar sales. Now, as Jen assesses, Chinese firms have amassed more than $2 trillion since the pandemic in offshore investments, parked in assets that really pay higher rates than yuan-denominated ones. And when the Fed lowers borrowing costs, the appeal of dollar assets erodes, and at best estimate potentially spurs, as he puts it, a conservative $1 trillion of flows back home as China's rate discount with the US narrows up. Now, as we assessed in our last few episodes, our liquidity providers have been confirming dollar selling to acquire gold, notably picked up in 2010, directly after the IMF refused to sell the PBOC the 200 tons of remaining IFM gold, which followed India being sanctioned to buy 200 tons directly from the IFM, the IMF, at $1,000 per ounce. Now, as we've since been tracking, these largely unreported monetary gold purchases, picking up after the dollar was weaponized against Russia in March 2022, much of it being transacted in very, very large oil for gold trades, but visibly and officially reported picking up in the last 18 months. That cannot be hidden. Now, however, given if we put this fresh de-dollarizing Fed rate cut aside for a moment, which is about to trigger an avalanche, as he puts it, of dollar selling, the de-dollarizing process has already picked up significantly ahead of October the 22nd BRICS gold currency launch. Now, while such an avalanche of dollar sales would also serve to support the yuan, as we drew attention to in our last episode, liquidity providers have also been reporting this very large pickup in direct bilaterally settled dollar-denominated monetary gold, 400 ounce, 995 bars, exiting largely London, also Switzerland, but largely. But we've also, in addition to that, there are as yet unreported fresh official gold purchasing that is occurring, and that'll be reported later, into an expectation of a strengthening yuan. It makes sense. And aside from what briefly appeared on the Bloomberg terminal, as yet, this story has not yet even gone mainstream, and I don't think it will. However, our well-connected Chinese contacts say it was no coincidence that White House National Security Advisor Jake Sullivan concluded a 3-day trip to Beijing last week, comprising of several meetings with Chinese officials, including Xi Jinping. And while the officially reported agenda, the items, they range from Beijing's warning against the US arming Taiwan, South Sea disputes, the aggressive sanctions on China, including those related to Ukraine. Election interference was one of the subjects. But really, the unreported elephant in the room was the BRICS-related de-dollarization avalanche referred to by Stephen Jen, and the realization that these dollar sales will largely be parked in first-tier physical gold. This puts the Fed, the only remaining global central bank betting against gold, between a rock and a hard place.
De-dollarization has gained significant traction in recent years, driven by the desire to reduce the world's reliance on the US dollar, which has long been the foundation of global trade and the primary currency held by central banks in their reserves. According to experts, the introduction of the BRICS payment system could mark a pivotal moment in this trend, potentially sealing the fate of the US dollar's dominance. As one expert explained, the US dollar has nothing that backs it, and there is no commodity that underlies it, making it vulnerable in the face of this accelerating de-dollarization movement. With central banks increasing their gold reserves, do you see gold replacing the dollar as a primary global asset? We want to hear from you. Feel free to leave your thoughts in the comments, give a thumbs up if you liked what you saw, and subscribe to stay connected with our ongoing exploration.